Hey, testing 1, 2, 3. We're back. NFP 159, baby. I keep forgetting, so the chat doesn't work on this setup. Hang on. Gotta find the chat. I have it somewhere. At least I did. Hang on. I gotta move the chat around.
We're inside now and out of the June jobs and before stocks moving back towards the lows of the pre-market session. European bourse is still down about 1/3% across the board. Treasury futures also holding in the lower quarter of the daily range, down 3 ticks in the 10-year note future.
All right. Hang on. Where's my mouse? Come on. Anyways, turn this down. Maybe turn that off. Hey. All right. I got chat over there. Can't quite see my face, but I suppose that's an all right thing. Live from Harvard University. Hey, I'm traveling. I got 3 screens. Not bad, right? So anyways, happy non-farm payrolls. 159. I got to find that chat again. I'll put it up on that screen. All right, I think we're good. I can see the chat. All right, cool. So I think it's NFP 159. That's a pretty good trend, so I'm pretty excited. Thank you to FX Street for hosting us for what are we, 13, 14 years? Hope you had a wonderful Canada Day. Oh yeah, it was also Independence Day here in the United States of America. So congratulations to the Americans for kicking out the British. The interesting thing is 2 blocks. 2 blocks this way, General Washington, he was general of the rebel army. He gathered his troops right 2 blocks over there. I can almost see it. 2 blocks away, he gathered his troops and then went into Boston, Charleston, and attacked the British. So it all happened right here. So yeah, straight out of Harvard. Thank you, Joe. So anyways, should be an interesting day. Let me get, I guess we have to turn that off. Gee whiz. Beep. Beep, beep, beep. All right. Well, without further ado, welcome to Trade Non-Farm Payrolls Live. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yeah, it's tricky. So, I got up pretty early. It's a holiday. I've only been sleeping 4 hours a day. So I decided to get up at 6:30 in the morning and do a webinar for a couple of thousand people. So anyways, the lighting is the lighting, but you're not here to see my face, right? Like, so if I move around, I guess it's all right. You can put me here, but whatever. I think the light will change, but anyways. So over the next 3 hours, I thought what we would do is prepare for the release of non-farm payrolls. And then we will trade non-farm payrolls. And then I can spend some time discussing what? Technical and fundamental analysis, trading strategies, answer your questions. See, you are the boss and I am the servant. I am here for you, so you are control. So make sure you get involved, ask questions, and all that kind of stuff. But by the way, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. We're a boutique foreign exchange brokerage firm, and I'd like to earn your loyalty and respect. These education webinars are designed to help you gain skills and confidence. And when you're ready to trade real money, maybe one day you will consider Traders Way. You can go there today, in fact, open up a demo account. In the back office, you can download MT4. And I'll give you my chart templates if that'll be helpful to you. I do daily webinars for clients every day for free, all compliments of the firm. I think you can test out our execution speed, you can test out our spreads, and most importantly, you can test out our swaps. And I think you're going to find the Trader's Way is amazing. But of course, world-class customer service. And moi, on top of all that, it's an offer you can't refuse. So please visit tradersway.com. Give us a shot. Let us earn your loyalty, your respect, and your business. Oh, I look smart? Cool. I'm trying my best. So anyways, let's start with the credo. The credo is something that came from business planning a very, very, very long time ago. I'm guessing 15, 16 years ago. I wanted to put things sort of in perspective on human terms. And that's really what a credo is. It kind of boils down your train of thought or your ethics or your morals even. It ties it all into sort of a statement. And I thought about it at the time because I was starting FX Bootcamp, and I thought, well, how could I tie this into a military theme? Well, there's three things that someone in active combat is worried about. The first one is you hope you don't die today. You hope you don't do something stupid and get yourself killed. That's got to be the first thing every single day, every moment of every day going through someone's mind that's in active combat. The second one is you have to achieve the mission. And then lastly, overall, if you accomplish enough missions, you might actually win the war. Okay? So that's kind of how I put it together. Now, as far as currency trading, I realized money, going back to this idea that don't do anything stupid that'll get yourself killed. Well, in Forex, money is your product, money is your service. We buy and sell money. We trade money. We're money traders. So whatever you do, you have to focus on not blowing up your trading account. Okay? I mean, that's it. Don't blow up your trading account. Don't lose a lot of money. Don't do anything that might jeopardize or put yourself in a situation where you might lose a lot of money. You don't have to make a lot of money today. Okay? You don't have to make a lot of money today. There's no individual day that is so important that you need to make a lot of money. Now, I know we all want to make a lot of money, but here's the interesting thing. If you bust out an Excel spreadsheet and you plan out, let's say you had an average mediocre day, whatever that is, 25 pips. Let's say on average, that's a very mediocre day. You're like, yeah, right? But you plan that out day by day by day, week by week by week, month by month by month, quarter by quarter by quarter, year by year by year for 3 years. Still only averaging 25 pips a day. And you're using small lot sizes relative to your account size. Every day, every single day is not a big day. But when asked about the most powerful force in the universe, Einstein said, it's compound interest. So now take a look at this. When you actually do the math, you'll be shocked. When I did the math, I did a 3-year pro forma cash flow statement at a business planning retreat I did with myself 15 years ago. And I was actually quite amazed how liberating this process was. Okay? How liberating it was. Because it added up to a ton of money. It was way more than enough for me to be satisfied after 3 years. And what it did is, first of all, it told me I was over leveraged, so I had to dumb my leverage down, which is a very good lesson. But it also taught me that any individual day was irrelevant to the whole. Meaning, if I just had boring day after boring day after boring day after boring day after boring day, 3 years from now, I hit my monetary goal, it's more than enough money. So that means today, I don't need to like go all in and put in a big money. And by today, I don't mean just non-farm payrolls. I mean any day. There's no reason for you to go big, put a big trade on and then pray or jump up out of your desk like, please, right? There's no need to even put yourself in that situation. Because I know if I just do my job, boring day after boring day after boring day, 3 years from now, 5 years from now, 10 years from now, I accomplished more than enough. So there's no need. So what that does is it means the focus now isn't making as much money as you possibly can. It's preserving your capital because you know you're going to hit your goals. You know it's just math, right? It's just math. Just do your job day in and day out, punch in, punch out. So that's capital preservation, never putting yourself in a situation where you might get yourself killed. Or in this case, lose a lot of money, or in some cases, lose all your money. Do whatever it takes to preserve your capital. Okay? The best way of doing that is having a trade plan. And that's what capital acquisition is truly about. If you're doing your trade plans and let's say you are not absolutely convinced you're going to make 50 pips, then don't trade. Okay, now 50 pips isn't the goal. It's 50 pips is like you're absolutely convinced you're going to make 50 pips. Then along the way, you can use stop losses to minimize the downside and very, reasonably quick, remove risk altogether. Get your stop to break even. Okay? And in that process of making pips, you can lock in some profit. A few pips, 10, 15 pips, and get your trade going, nurse it through. Maybe when you're up close to that 50 pips profit, you have to look at your market again, look at your trade plan again, and then ask yourself, is this trade worth more than 50 pips? Because if you got going, you got the first 50 pips, what did you use for your target? What is the long goal here? Are you scalping? Are you spot trading? Are you swing trading? Is it a daily swing, like a day trade? Is it a weekly swing? Is it a monthly swing? Because ultimately, once you got your stop to break even or locked in a small profit under the minimal acceptable performance idea, it would be great if you could let those winners run. And that's capital appreciation. And ultimately, if you want to make big money, you have to let your winners run. What a lot of people do is their trade plans are really piss poor. They don't understand fundamentals. They don't use any leading indicators, so they don't really know what's going on. So they can never let winners run because they're never in a situation where they can. And what happens then is they get frustrated that they're not making big money. So to make big money, they put on big lot sizes. And that's the recipe for disaster. Right? Over leveraged. Wow, it's the end. So anyways, that's sort of my mind thought. Preserve your capital, make lots of mediocre, boring trades that are well planned, well executed, not very exciting. And when you can, you let them run. Lock in a small profit, lock in your 15 or 20 pips, and then let it run. Once you got 20 pips locked in, go for 200. And move your stop. And then move your stop. And move your stop. Pretty soon you'll have more and more locked in. Let it run. Let it run. Let it run. Kostin wants to talk about euro lira and dollar lira and all that kind of stuff. Okay, we can do all of that. Pound dollar. Okay, I can do that. Some gold, I can do that too. Cool. All right. Yeah, I can do that. If you have any other suggestions for today, that's great. Now, I won't look at particular pairs until we're done sort of with the volatility of non-farm payrolls. So, we'll have an hour or even 2 hours to go over each individual currency. But I think what I'm going to do is sort of isolate into euro dollar and let non-farm payrolls come out. We can identify, some tops and bottoms on that, and then we can spread out into other currency pairs that, we will look at sort of setups and past moves that have nothing to do with non-farm payrolls. So like we can plan next week if you want. Lucas says, I can argue that if you can control your stop very tightly from the start, yeah, 25 pips. Generally that's enough, but 50 you could, but yeah, 25. Take out 70% at 20 odd move stops, break even, or 5 pip, and then, well, 5 pip profit, that's silly. That's stupid. That's such little money. Why would you even lock that in? So I wouldn't care, because here's the thing, Lucas. If someone's reviewing your trade history, okay, let's talk about it like you're running a hedge fund, and you have lots and lots and lots of trades with 5 pip profits because you try to let them win, you try to let them run, but it comes back, right? It can come back and you get knocked out with +5. And you'll say, yeah, well, I have an 80% win ratio. And they look at your average win. Well, most of your wins are going to be 5 pips. Some of them are going to be 100, but most of them are going to be 5. So your average winner is going to be tiny. Now your losses, well, your losses are going to be much bigger than your winners. So I'd be very careful about that. So if you're managing your portfolio in such a way where you want to attract investors, instead I'd rather you have a -5 than a +5. The reason for that now is if you have lots of 25 pip or 50 pip losers, but you also have a whole ton of -5, then what it does is it lowers your average loss. So now your average loss gets smaller. Now, the winners that do work out for you are going to be closer to 100 pips, let's say, because you're letting your winners run, or you lose -5 pips. So now your winners are like 100 pips, and your losers are going to be more like 15 pips on average, and it all works out. Your winners are significantly larger than your smalls. Okay. But anyways, Lucas, it sounds like maybe you're trying to say this somewhat of the same thing. So cool. Right on. Okay. So I'm going to go over the charts template, chart setup, so that you understand what you're looking at. And then I can go over the high volatility event-driven strategy that I use for things like non-farm payrolls. And then I can answer any questions that you might have going into non-farm payrolls. We're going to get the number live from tradethenews.com, so we'll have the results faster than anybody. We will we'll watch and respond and look at setups based on the volatility after the release of non-farm payrolls. We'll let the move extend to either the nearest major support or the nearest major resistance. We'll look at counter trend trades. And then by then we should be able to talk about things outside of non-farm payrolls. Technical analysis, fundamental analysis, trading strategies, techniques. Okay, that kind of thing. Will anyone second the agenda? All right, so take a screenshot. You had enough time. All right, this is the 2155 EMA. This combination tells me the direction of the market and the speed of which the market is going in that direction. and the 21 is below the 55, the market is technically bearish. If the 21 is above the 55, the market is technically bullish. Okay. Now I'm also looking at the angle and separation between the two moving averages. When they're wide and pulling away from each other, diverging from each other, then you need to be aggressive. Another way of looking at it is if price is below the 21 in a bearish market, you're bearish and aggressive. Okay. If price is above the 21, but the market is bearish, then you're bearish, but conservatively bearish. Okay. So there's this idea that you're monitoring market conditions and you're adjusting your expectations. Sounds pretty nice. It's actually pretty key. Now, the 5 and the 8 averages I use really as a trigger. So going back to the 21.55, you can see at the very beginning of this chart, the market was technically bearish. And obviously had been bearish the day before. If this was one day, just imagine the previous day, it would have closed bearishly as well. So you would have been a bear yesterday, then this day is starting out, you would have been a bear again. You look at it and you're like, oh, guess I'm a bear. Done. So at the same time, do you see at the top left, you were a bear yesterday, you're still a bear today. You get the 5-8 cross down. That 5-8 cross down is your trigger. Pachow! That's where you sell. And then when it crosses down here, that's where you take your profit. Okay? This is the very basics of trading. Very basic setup using moving averages. The 200 EMA I use for doing analysis, that's the fair market value. That's where the bulls and the bears agree. Now, in my book I wrote a million years ago, 12 years ago, I think. In that book, I said the 200 EMA is a target, not an entry. Yeah, Max, if you need to see my face, I'm going to be over here. But do you really care? Do you guys really care about my face? I guess so. Okay, so anyways, the fair market value, where bulls and bears agree. It's a target. Now think about that. Oh, Anthony, tradethenews.com. Okay. Okay. What does that mean? Well, if it's a target, you can trade back to the 200 EMA. But when you get to the 200 EMA, there's no trade. Mark and everybody else, I left the screen, I left this up for about 3 minutes for you to take a screenshot. Okay, so do it. Take a screenshot. Okay, 3, 2, 1. Okay. So think about when you're at the 200 EMA, there's no trade setup. Why is there no trade setup? The bulls and the bears agree. That's fair. That's the fair market value. So who's going to take the shot? Who's gonna win the battle? Who's gonna buy there? Who's gonna sell there? But you don't really know. Nobody knows. That's the fair value. Okay? The market's not bullish. The market's not bearish. So I would not want to trade there. Okay. I don't think that'll be important today, but in analysis it is. I use Bollinger Bands to measure volatility. I use oscillators. The one on top is a MACD. I set that at 21.55.8. And if you understand technical analysis, you'll understand why I use 21.55.8. In fact, I've already explained it. That's the hint. Wah, wah, wah. Guangzhou? Right on, UK Kenny. Guangzhou's nice. Daniel took me, boy, was that 2 years ago, Guangzhou? Okay, and then also down the lower oscillator is a stochastic oscillator, and it's at 853. Okay, so that's what one chart looks like when you put it all together. Do you need all these squiggly lines? Some people, because I've been doing this a long time, right? So a lot of people, when they're just getting to know me, they look at a chart like that, and they're like, oh my God, Wayne, you must be a moron. You have so many lines on there. It's so confusing. You don't know how to trade. You must be a monkey head. I'm like, yeah, well, I'm a monkey head. But here's the thing. You don't need all these lines, nor do you need them all at the same time. There are tools. Now, when I look at this chart, I only need to look at what I only need to look at what I need in that moment. So very often, my mind ignores most of this information and just pulls the one thing out, right? But here's the thing. You don't need all of this. The things you need most are price action. And then I like pivot points as well. And so we can get into that, okay? But these are all tools. Do you need these tools? No. Can you use some of them and not others? Yeah. Could I use the MACD and get rid of my 2155 EMAs? Yeah. If I use 2155 EMAs, do I need a MACD? No. But they're helpful. They're tools. Okay? It's like your car needs a steering wheel, some tires, some brakes, an engine, right? So you can't hate me if my car has, it drives itself. Okay? They're just tools. But there's a common thing that we all need to know. That's going to be price action. And I like pivot points. The reason I like pivot points is that they provide leading indicators. So both price action, okay, and pivot points are leading indicators. Price action is kind of like the name. It's based on price. It's price support and resistance. And pivot points are market support and resistance. So we can cover more of that later. If you want, you'll see I have them on my charts. As far as today in our news event, what time is it? Our news event is going to create some volatility. Therefore, we need to have a unique trading strategy during that time of volatility. Your normal trading, your boring trading, your average everyday trading will not apply to this scenario. So what I'll teach you today is how to use a high volatility event-driven strategy, but life typically isn't high volatility, nor do you need event-driven strategy, right? So we'll do this, but this isn't how I normally trade. It's just a news trade, no big deal. So imagine these are 1 minute candles. The news comes out, the market interprets the news as being bullish, so you get green candle, green candle, green candle, green candle. 3, 4, 5 minutes goes by. Cool. I'm looking for the spot where it stops. Okay? And I don't actually draw the line anymore, but we need to pay attention to where it stops. It's an important spot. Now, typically, it's a psychological level. It's a previous resistance level. It's a reasonably logical level for price to wimp out. I mean, that's why it's wimping out. Okay? Also, the markets move so quickly that it left a lot of people behind, right? So imagine there's some that jump in right after the news. And let's say maybe the market captures 20 or 30% of the bulls, but not all the bulls. So it goes up, hits a little bit of resistance, comes back, and that's the part that I'm looking for, where the market comes back and you're able to buy sort of a second chance. Okay? Now, are we guessing before the news? No. Is this a fundamentally based trade? No. It's just a news scalp, not a big deal. So if the market reacts bullishly, all right, we'll be a bull, but we still need to buy low. Okay? We still need to buy low. That's it. You still need to buy low. So we'll use a Fibonacci study, and we will look to buy somewhere between the 382 and 618 Fibonacci retracement. We'll even look a little left here and see if we can get a roll reversal. What used to be resistance might now be support. That's the logic. And right in there, you buy. You put your stop below the lowest low, and you might be risking 25 pips. Cool. Not a big deal. It's a scalp. I wouldn't put a lot of money on this. So maybe cut your lot size in half. So now your relative risk is only 12.5 pips, not 25. It's not going to make you rich. In fact, you don't even need to trade this at all. But whatever. So that's how you handle it. And in this case, that got a little scary. It did a 786, a little lower than you would have liked. But then it held, then it held, then it held. See, the cool thing is if your stop's below the lowest low, you're only risking that, let's say, maximum 25 pips. So it's not a big deal anyways. And for 1 minute, it went a little bit lower than you would have liked. And a minute later, it was sort of back. And a minute later, you're back to sort of break even. Okay. Now, with this type of trade, what I used to say is in about 4 or 5 minutes, you should be break even. Problem is we don't get that kind of volatility anymore. There was a time when non-farm payrolls would come out and we would move 300 pips. Let me make it even more believable. There was a time when non-farm payrolls would come out and it would move 100 pips. But it would do it in 5 minutes. So these would be like big candles, right? So to go up, 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 down, 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 you'd buy it. In 5 minutes, you'd certainly lock your stop at break even. We don't get that kind of volatility anymore. Okay? Hakeem, we'll do gold in a bit, okay? Okay, now in this scenario, you definitely do want to move your stop to break even before we get to this line in the sand. That's why I put that line in the sand. The reason for it is if the market's going to stop and reverse and collapse and go down, 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 it's going to do it right around there. Okay. It'll form a double top and then it'll drop. So at that point, if you had entered down here like you should have, okay, well, at the very least, you're not going to lose any money, okay? You'll probably even be able to lock in a small profit. But the idea here is when you get to this line, it's a strategically important line, and you need to be at a point where you're not going to lose money, okay? And when you do move your stop to break even, you're now what we call hero or zero, because you get to the moment of truth. If it gets to that line and drops, you don't lose anything. Maybe even you make a small profit. But if it breaks that line, you're a hero. Okay. So at that point, when you get near that line, you want to become hero or zero. Move your stop to break even, and you get paid if it breaks through, and you lose nothing if it doesn't. Okay. Capiche? But don't make a big thing out of it. It's just a scalp. Don't worry about it. And here's the live market. Now, I don't have a handy clock, so you guys got to keep an eye on the time for me. What is it, 8:07? I'm going to go back here. I know you still can't see me that well, but yeah, I don't know why you don't even need to see me. All right. Cool. So let's go through some charts. What should you do before non-farm payrolls? Well, you need to identify some key levels of support and resistance. Okay. Now, are we going to like set up some trades before the news? No. I'm an expert. I don't guess. If you wanted to trade, let's say this euro dollar, the best euro dollar trade that I'm looking at was the last day of last month. There is a very obvious bearish swing trade. That's the big money. That's where you make a career. Okay? Trading a few minutes before non-farm payrolls is just dumb. It's just dumb. It's amateur. Why would you guess? Why would somebody pay you to guess? Why would you risk your own money guessing? Okay? Big fish knows what's going to happen before the news. No. Everybody stop thinking that way. Stop thinking that there's inside information. Stop thinking that your broker's hunting your stops. Stop thinking that there's Illuminati. Stop thinking that people are controlling the market. All of that is nonsense. For you to be successful in Forex, you need to plan ahead. Okay? That's it. Even reacting to the news like this non-farm payrolls, it's silly. You can pick up a few pips, but you're not going to get your yellow Lamborghini. If that's your measure of success, you're not going to get your yellow Lamborghini scalping the news. It's something that's very pitchable and sellable, and you see a lot of dummies on YouTube getting rich quick on their little news scalps, but that's a facade. Just normal market analysis, macroeconomics, technical analysis, putting that into a trade plan, something that could be explained to somebody, maybe a potential client, maybe a client of yours. That's how you get your filthy, stinking rich. That's if you wanted a yellow Lamborghini, you earn it through hard work. Okay? But like scalping non-farm payrolls, yeah, okay, fine. It's great. It's just not going to be a career. Okay? But trading right before the news, that's amateur hour. Yeah, that's right, Kango. Kango's like Martha Stewart had inside information. Yeah. So anyways, I look at this chart and I say there's a very, very clear bearish entry, basically July 1st. And we've actually breached a bit of a bullish area as well, but that might just be related to non-farm payroll. So that's much more interesting, okay? You need to learn how to swing trade, for example. Okay. But anyways, let me see if I can turn up the brightness here. How do I do that? On this one. That's bright. Huh? Not bright enough. All right. So we need to identify key levels of support and resistance. Do you see them? The biggest one is basically in this zone, huh? If we head down like that, if the dollar gets strong after non-farm payrolls, that puts us low. That gets down to that pivot. And the thing is, how you say in English? Well, it's support. Okay. Now, what traders were thinking at the beginning of the month, this is very clearly a swing trade. Very, very clearly. And their target actually is down here. It's a long ways down, huh? So let's keep that in mind. What if the market goes up, but those bears are still in the market? What are the bears going to do? There's two plans for a bear here. Up, 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 up to this level, down, 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 down. Okay? And then next week's going to look like this. Or it can go a little bit higher than that. So today maybe it does this. Okay. So the way I separate all of this out, let's clear that. So I set it up as a plan A and a plan B. Okay. There's a sell up here and there's a sell up here. Okay. So that whole area now, if you want to remark it, this whole area, this is sort of the low part and that's the high part. Okay. I want to make sure you understand me. That's a bearish setup if the market turns bullish. Huh? You see that? That's what happens. That's what bears would do if the market is bullish. Now, what would the bulls do if the market's bullish? Well, the bulls now, to make this go up, they're going to need a move, they're going to need a catch, and they're going to need something like that. And we already analyzed that right in here. They're going to be challenged. Okay, there's going to be a big challenge. Okay. Beatrice says, can your NFP scalp be used as a breakout strategy? First of all, I don't do a London breakout, whatever. That seems to be a very silly trade, at least as sort of traditionally done. There's other ways of trading London. Okay. But can the NFP scalp be used as a breakout strategy? No. No. Okay. Typically with the breakout, I look for roll reversals. So it may seem very similar. Okay. But the difference is you know exactly when non-farm payrolls is coming out, 8:30. You don't know exactly when London, as you say, breaks out. Okay. Now, traditionally, what I try to do when it comes to a London trade is I try to be in London basically before it happens. Okay. TIXR, I just explained, and I'm pretty sure you were here, that trading after non-farm payrolls actually isn't really that necessary at all. That there are better things to be doing as a career Forex trader than scalping the news, but you certainly can do that and make money and be fine with it. But trading before the news, you're a degenerate gambler and certainly not a professional. So do you buy before or after the report? Definitely not before, and you certainly don't have to after. I think the big money is made swing trading. Okay. Yeah, you could trade New York, let's say. Yeah, you pick up 30, 40 pips. Cool. Great. London, I like to trade into London. Like the London breakout if you do a London breakout strategy, you inevitably leave as many pips on the table as you take, because you give away the range of the breakout. Okay, so I would rather do medium-term technical analysis to identify the support and resistance that's likely to be important at the London Open and trade that, not waiting for London to do something and then trade after the fact, because now you're lagging, plus you're relying on other people in the market. Instead, I would just do the analysis, trade at the support or resistance, and collect all of it. Instead of waiting for the breakout, instead of reacting to the market, I'm trading my plan. And there's a very significant difference. And of course, my plan is going to be based on bias as well, right? So my bias is my long-term strategy based on fundamental analysis. And then from that, I look at like my monthly targets, and then I look at weekly targets, right? And then I'll look on daily targets, and I'll line, I won't line them up, but I'll trade the three strategies congruently, okay? And if that doesn't make any sense, I just don't have more time to explain it. This is a very long webinar, so I can explain it after non-farm payrolls. Hey, Avi, if that makes sense. Guys, I need you to keep an eye on the time for me. 11 minutes. Okay. So, like, I'll give you an example here. Let's do it this way. I have all these pretty colors on the charts, right? And in fact, I can get rid of the moving averages. Some people really don't like all these lines. They just can't get past it, okay? All right. This is the information I need to trade. Hopefully that's not overwhelming, okay? I have two leading indicators here. One are the lines on the charts being printed. That's support and resistance of the market. And then there are no other lines, okay? This stuff here, they're just candles. They don't even have to be candles. They can be, I find it hard to see in here. Okay, it could just be a line like that. It's just price. So now I have support and resistance of price, and I have support and resistance of market. Both are leading indicators. Okay. It doesn't tell me what's going to happen during non-farm payrolls, but I can tell you what I'm going to do next week. I can tell you what I would want to do for the rest of the month. Will it tell me what's going to happen when non-farm payrolls comes out? No. No. Okay. Where do you get my drawing tools? You can go to charts.fxbootcamp.com. I can't type it in because I get blocked. You can have all my chart templates, all my indicators, all my profiles, absolutely for free. What I ask for in exchange is that you open an account at tradersway.com. So to download my charts, you go to charts.fxbootcamp.com. Okay. No worries, Beatrice. Take care. Okay, so today we'll look at gold and oil. We'll look at dollar pairs. We'll look at yen pairs. And we will look at exotic pairs. Am I missing anything? What do I consider a good pip count? Some months you might make 10,000 pips, and other months you might only make 1,000 pips. Okay, Bonnie? Depending on seasonality. July, I wouldn't even try to make a lot of money. Wouldn't even try. No, I'd still trade. And in August, I tend to really set up the second half of the year. Okay. July is about just trying to earn some income. Just make some money, but you know, God forbid you'd lose money, right? Don't lose money in July. No, I'm not a big stock trader. I leave that for like my retirement account and such. But I bought Apple at $6. I bought Bank of America at $5. Okay. Gold just floating around. Okay. There's a big bearish setup in gold, which would indicate if that followed through, that would indicate a strong dollar. Okay. Thank you, Mark. Maybe I'll get Trade the News going. I think I got it wrong. What was that? All right. Unemployment 3.6. Underemployment 7.1. Labor force participation just under 63.
That's 5 minutes now. 5 minutes to the jobs report. We have 160,000 in non-farm payrolls.
So 160 expected, private payrolls 150, manufacturing
dollar index of
3K.
Heading into the payrolls figures, 96.92 last, and the dollar index gold trading slightly lower now, down about 0.5% at 14.80.
Gold sitting on the 4-hour 21. So right now it's as bullish as it is bearish. Okay? So for example, what bears are thinking is this. Okay? What a bull is thinking is this. And right now it's 50-50.
Comes from India's finance secretary saying they will come out with the second half borrowing calendar in September. Again, earlier today, India did maintain their borrowing levels for the year when they released their budget assumptions. This executive is saying you'd expect to provide more data on their borrowing needs in September. Now 2 minutes of the non-farm payroll reading. We're looking for 160,000. The unemployment rate expected to hold at 3.6%, and wages expected to take 1/10 higher than last go around at 3.2%. Average weekly hours expected at 34.4. And in terms of Canada, their unemployment rate expected to tick up 1/10 to 5.5% on job growth just under 10,000. Start off with the U.S. employment report, run through the figures there, and then move to the Canadian one. U.S. 10-year yield, 1.968% heading into the jobs report.
Man, it's amazing how low that is. It's just sickening. I used to believe it was technically impossible for the 10-year T-note to drop below 2%.
1 minute to the report.
All right. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Thank you to FX Street for being fabulous hosts. This is Non-Farm Payrolls Live, month 159 in a row. And please visit tradersway.com and open a demo account. Let us earn your loyalty and respect.
20 seconds.
Remember, if you don't know what you're doing, don't trade. Let's go.
224,000, well, 160.
200.
3.7% in the unemployment rate, up 3.6, above the 3.6% expectation. Wages at 3.1%, a little below estimate, 0.2% on a month-over-month basis. And manufacturing plus 17,000, private payrolls plus 191,000. And in terms of Canada, the unemployment rate in Canada was 5.5%, in line with expectations, and net change in employment was minus 2,000 versus plus 10,000 expectations. So Canada report was pretty strong. U.S. report all the way around.
Coming in hot. Coming in hot.
And a stronger dollar initially there, euro 112.50 given an offer, stronger dollar on the payroll beat.
And Treasury futures moving lower, the yields higher, the 10-year back to 1.98%. Again, 224,000 of the non-farm payrolls, a significant beat. The back month was revised marginally lower. Wages, average weekly hours at 34.4 were in line, and wages coming in at 3.1% year over year, in line with the prior, but 1/10 below the consensus expectation.
Coming in hot.
The dollar CAD at 130.90, moving up about 40 pips on the two countries' June jobs report.
What was the number out of Canada? Negative 2.2? Wow, no kidding. Canada negative 2.2.
Just for the birth death ratio, that rose by 102,000.
Even better. Even better than the real thing. Ooh, 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 ooh. Ba-ba-da-da-da.
Looking at some of the other particulars within the report, the employment participation rate for Canada held at 65.7.
Just off the 382.
While the U.S. ticked up a tenth to 62.9% from 62.8%. That did coincide with the 1/10 higher than expected reading for the unemployment rate.
Coming in hot. So the reason that dollar gets strong in that situation is the belief that the Fed will not be able to cut interest rates in a market that is adding that many jobs. Remember, rate cuts are priced into the market, and a big NFP would make that more doubtful. Even better than the real thing. That's hot, man. Okay, shields up, red alert.
Belgium going to be selling up to 2.8 billion euros in bills at auction on July 9th. That's Belgium.
You're in your cell zone.
And as you expect, on the strong jobs report, we have seen the dollar firm off. Gold did make a push lower, down about 1.5%, back below 1,400 in front-month gold. The euro may hit a low of 112.43, now bouncing to 112.55, and the dollar yen at 108.23 is up about 45 pips as well. Indian auction off 160 million rupees of T-bills. That's India. The U.S. yield curve has flattened slightly to 17.5 basis points. We were about 18.5 basis points heading into the jobs report. And the U.S. 10-year yield of 1.982%.
Even better than the real thing. Look at that. Cat is just hot. Look at that. Oh my god. Oh my god. Look at that, huh? Just crazy. Not a big reaction out of oil. Ooh, the weekly crop report. Remember what we said about gold. Okay. So if you miss on the 1 minute, then it'll come back around on the 5 minute, but it might be a half an hour before you get another chance.
Along with the 10-year note future now 127.25, the 10-year yield approaching 2% following the better than expected non-farm payroll print. The long bond yield back up towards 2.5%.
Yeah. That means the stock market's going to rally. CAD, beautiful little 382 off that, just gone. So this is a good risk-on sign, guys. So USD Swissy is Oscar Mike. The yen pairs are probably long and gone. Michelle says yen and Swissy are suffering the most. Actually, they benefit from weak currencies, so they're happy as can be. Trent says, so no rate cut in July, right? Well, the thing is, I don't think July has ever been a live meeting, so I found that hard to believe from the beginning. Okay. Okay, rate cuts and stuff are usually done in October, but not July. Cool. All right, I'm going to move my stop to break even. It's just a scalp, I don't really care. Let's move and take a look at the yen pairs. Now remember, guys, if you want my chart templates, if you want my profiles, if you want my indicators like pivot points or oscillators and all those different things, they're available for free download. Okay, all of these, the indicators, the templates, the profiles, they're all for free. Okay, right there. Yeah, that's right, Beatrice, and yet the Aussie got strong, huh? And I can't, it's bright in this room, I can't see things.
Stocks now declining here. The S&P futures down about 0.4%. Nasdaq 100 futures down 0.5% as interest rates rise. The 10-year back above 2%, and gold falls. The dollar firms in the wake of the stronger than expected June employment report.
Even better than the real thing. So we have like the yen pairs in this scenario should go up. Pound has been the weakest, so I'd be the most cautious on that one. Okay, so we might look at like an Aussie, for example, or a Kiwi. And if it can break to the upside, then we're out of this area. Okay. Now the monthly swing is saying that we'll probably only make it to the monthly R. Oh, thank you, moderator, for posting that. Thank you. I appreciate it. Always the best moderator. I'm telling you, world's greatest. Do, 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 do. Even Euro's doing all right, huh? Even Euro against the yen. So remember, dollar's crushing Euro. Now, one thing to point out is that if you recall the week before last, there was a big upward move based on this idea that the Fed was going to cut. Most interesting thing is a lot of people could have been suckered into staying bullish. One of the things we talked about at Trader's Way during our morning webinars is that this is a bearish setup, not bullish. Okay? And even though we wanted to be, let's say, a bull here and wanted to be a bull here, this is not at all a bullish entry. And so what we talked about is the first possible bullish entry would be down here. And this is way back when we're way up here. That you had to wait days for the first chance, and really this is sort of the second chance. And if you were sitting and waiting, you never got an entry, right? I mean, you might have got into here, maybe. But the whole point is, even when you're up here and you're wanting to be bullish, you simply cannot be bullish up there. You just cannot buy high, no matter how excited you are about the trade. Right? So that patience has saved you from potential disaster, I'm sure. No, I think I would just get out. I don't really scale in or scale out, traditionally speaking. So by the way, I see the comments over here. That's why I keep looking to this way. So right now it's just sort of letting things develop. I want to switch one of these. Like, I don't think I could possibly buy the pound yen for a while because it's so bearish. But I can change this. Oops. I can change this to, what did I do here? It's getting difficult to see in here. It's very bright. And I'm in the least bright of the offices. What do I want to do? Oh, I want to do Kiwi. Even better than the real thing. Well, Munchkin, it either trends or it consolidates. And if you consolidate, I don't know. I look at scalps as like silly. So I'm not trying to make 20 pips. So I'd say if I'm up 20 pips and the market comes back 20 pips and knocks me out, I'd just leave my stop at break even or -1 or -2. Okay. I usually don't move it actually as break even. I move it to like -2. So like I'm looking for opportunities. I don't care about 20 pips. So I'd rather go for 200 pips than 20 pips, right? So if it mows 20 and comes back, knocks me out, I had the opportunity, I didn't lose anything. Okay, fantastic. I had an opportunity, didn't lose anything. Now I got to find another opportunity. That's fine. Okay. Now some people might say, well, they need the 20 pips. I would say you're probably over leveraged, but it's a choice. Do you think to lock up the positions is a good strategy if you're suffering an extended floating loss? Dan, that's impossible. So under no circumstances are you allowed to be in extended floating losses. And there's no way to trade you out of extended floating losses. You should never be in extended floating losses, ever. What's happened is you're not managing your risk properly, and it probably is a function of lack of trade planning. So you need to, generally, now this is up to between you, your tax attorney, and God, but you need to figure out how to handle this. But at some point, whether it's this level or this situation or not, you need to learn how to take losses. In fact, in my book, I talk about taking pride in your losses. Okay? You understand that? There's a major dysfunction with that, Dan. And so I don't know what your situation is. And it's not for me to advise you, and it's not for me to tell you what to do and all that kind of stuff. But at some point, you need to teach yourself to never be in that situation. And your extended floating losses may be a series of very unfortunate events, but you should have taken the losses when they were small. Okay. Temmie, what do you mean plug? Oh, my book? Temmie, don't buy my book. How about that? Temmie, if you bought my book, I think I'd make $5. I wrote it 15 years ago or 12 years ago. So don't worry about it, Temmie. I'm not trying to get your $5 from you. It's not even my book, right? It belongs to Wiley Publishing. So it's just, I honestly wrote it, so it's a documented point of view, but I'm not plugging my book. I really don't care if you buy my book or not. Okay? Yeah, double infinity, yeah, follow your trading plan no matter what. And part of your trading plan is when to take the loss, right? Phil says, what exactly is extended floating losses? It sounds like a bunch of trades that are like negative 200 pips each. And whoever posted that question was sitting on these losses. And that's the issue, right? That's the issue where I'm trying to share, like, you need to do whatever it takes to never be in that position. And what that often means is you have a trade plan, and no matter how wonderful your trade plan is, many of them fail, and you should take the loss when it's controllable. Like, have no problem. Like, when I said take pride in your losses, you should be able to show someone your loss. You're like, look at this. I sold a double bottom. Or sorry, I bought a double bottom. Look how beautiful this double bottom is. And it still collapsed. I can't believe I lost money on that. People are like, yeah, man, that's really bad luck. I can't believe you lost money on that. Right, that's the way to do it, right? Like, where you're like, I can't believe that double bottom didn't hold. And someone else says, yeah, I know, right? You're not hiding your losses. Yeah, Joe says, like, no trading without a stop loss. Yeah, that's by almost definition, right? So whatever, it's just whatever it is, right? It's a very, very, very bad deal, idea to have floating losses. John B says, what is your book called? John, you know what my book's called. Oh, Temmie says it was a joke. Well, I can't see your body language and stuff, and I get heckled every single day, Temmie. So people love to come in and poke away at good karma. Yeah, is that right, Joe? Yeah, back in the early days, I had some bad experiences.
Over a half hour now to the opening bell here in New York. Markets globally had about 25 minutes to digest the better than expected June non-farm payrolls number, the overall strength in the U.S. labor market continuing. We're seeing.
Yeah, let me turn that off. Yeah, like who said it? Yeah. Alton's like losing with a full house to a four of a kind. Yeah, but you wouldn't hide it like, oh man, I can't show this to you. No, you're like, dude, look at this, and you even put the cards down, right? You're like, dude, I had a full house, and everyone's like, oh man, and the other guy's picking up the chips, right? And he's like, yeah, that's a bad break, right? You should be able to share those losses versus hiding them. And, many people do hide their losses. They don't want to talk about it with their friends, their family, their wives or husbands or whatnot, right? So you should, you should get beyond that. So to whoever lost, whoever posed that question, I don't know what you're going to do now. I don't know if you have to sell a kidney to get back to break even. But, oh, am I in New York? No, I'm actually at Harvard University. Oh, lost a cable here. Hang on. I lost my monitor. I switched it. Okay, that's back. Hang on, where did my chat go now? Is that it? Yeah, so, Hang on, I got to move this. So yeah, what radio? No, it's tradethenews.com. Am I in New York? No, I'm in Cambridge, Massachusetts, at a little university called Harvard. I'm doing 2 degrees. I finished one in May, so now I'm an alumni of Harvard University, and I'll be done my 2nd degree. My 1st degree is in macroeconomics. My 2nd degree is management and finance, and that will be done in May. But yeah, this is it. I'm in the Smith Center called Harvard Commons, and they have these meeting rooms. I was in a meeting room 2 days ago right over there with my cohort, and it's an old bank vault. That's pretty cool. John says, have you ever traded futures? Yes. Well, back in the day, I traded spot Forex, futures contracts, in particular like gold futures, oil futures. I did like 10-year T-note often. I don't trade futures anymore. Oh, and of course, I was trying to think of the other things like S&P 500. Also, DAX was interesting. I don't trade futures anymore. This was quite a few years ago. Oops, that was quite a few years ago. Oops, hang on, guys. Now I can't even find my mouse. Come on. There we go. Years and years ago when I did that, sorry, I gotta get my chat back up now. Okay, years and years and years, some options. Yeah, I wouldn't call myself an options trader, but I know how. And of course, stocks, sure. But when it came to futures and stuff, I got a tax bill that was hundreds of pages. And well, not the bill itself, a tax filing. And it had to do with spot Forex was treated one way. Financial futures had a different tax treatment. How do you say? So commodity futures had different tax treatment. Stock futures had different tax treatment. Bond futures had, or treasury futures had different tax treatment. And it just got really, really complicated. And of course, complicated means expensive. So I trade everything through Forex. So I love Forex. So if I see a move, if I see a move that indicated the stock market was going to go up, I'll try to trade the same thing through correlation in Forex. Okay, so like for example, historically, if the S&P 500 was going up, maybe I'd be buying euro yen instead. Okay. Steven says, do you think George Soros still has the record earnings in one day? Well, it's all relative. I'd probably say no. I mean, what did he make, $1 billion in a day? That's not that big of a deal. And Steven, did you know I sat on a board with George Soros back in 1995? So I'm within 6 degrees of George Soros. Oh, Mike he's pondering why I'm going to Harvard University. Okay. I'm actually trying to lead by example for my 2 children who are of the age of doing homework. So since my children were old enough to be given homework at school, I've also been doing homework and sweating bullets over final examinations and writing papers and doing group projects. So as long as my children have been in school, I've been in school. And so that is the primary reason. Okay. And it's funny, if you trade and can make tens of thousands of dollars, yeah, tens of thousands of dollars is not a lot of money. So, yeah, so I'm trying to be a role model to my children. So I don't know if that helps solve your struggling with my issue of going to Harvard. Plus, Harvard's like the best in the world, so why not? Does the stock market have any effect on Bitcoin? Probably. Oh, okay. Yeah, Stephen knew about. Yeah. That's why I wondered if you brought it up or if that was for some other reason. What is your job or career? For almost 20 years, I've been a currency trader. Okay. So, anyways, let's catch up to the market. Let's see what else is going on. I was looking to see if we can get a 4-hour yen, Kiwi yen move here, but even that's not really working out. So let's kind of do around the world. Unless you guys want to do exotics. No, maybe not. Let me know if you guys want to do exotics later. And how were you able to go to Harvard? Yeah. I'm good. So you can see our entry here. There was a reload. Okay, as you can see, we call this a roll reversal. That's basic price action. So quite a few guys say that you don't think going back to college was a good idea. Okay. Not many people, apparently quite a few people in the chat room today, but most people have not laughed at me for having multiple degrees from Harvard. Do I need them? No. But Harvard is the best in the entire world, absolutely, without a doubt. And so to be surrounded by brilliant people, I thought would be interesting. Certainly wouldn't hurt me. So, but if that seems silly, then okay. Okay, I guess I'm being silly. But I'm a ridiculous person, though, anyways. Oh, yeah, let's do Aussie USD. Sure, for sure. Eh? Now, the problem is Aussie more recently has been strong. In recent past, it's been weak, but then it turned strong, so we'll see. Okay? So now this is interesting because this sets a pretty decent sell. If you have money, it's worth it. Yeah. Yeah, and you know, I mean, I don't know. Yeah, I mean, if you have the money, to me, I never even thought about it financially. Yeah, I suppose if you didn't have any money. See, if I didn't have any money, I'd go to Harvard. If I didn't have any money and I couldn't go to Harvard, I probably wouldn't go to university. Okay? So that's how I feel about it. If I didn't have any money, I'd find a way. I'd get a job while I was in school. I'd get financial aid. I'd beg, borrow, and steal. Okay? And I'd go and I'd make it work. If I didn't have any money and I couldn't get into Harvard, I wouldn't go to university at all. How did I get in? There was an application process. I'm in an elite executive program, and the acceptance rate was 1%. Okay. and I was one of the 1% that got in. 20 people were accepted into the program. It was a 4-year program. We are now in our 4th year, and there's 9 of us left. Okay. So that's it. So yeah, I applied. They picked me. All right, so some of you agree with me. Cool. All right, so anyways, what does this mean? Let's go back into the technical analysis, all right? Okay, what this is suggesting here, this area here to form a double top, it gives us a monthly target here. Now, I can't quite read what that price is, but it's down here, okay? Now, this should set us up for next week as well. So between now and Monday, if I were me, I would look for a move like this, okay? And that's next week now that I have planned. Temi, that's a pretty personal question, so I'm going to ignore that. So I'm just keeping my eyes on the news here. Okay, not a lot happening. It's summer. Okay. Any questions about that? Doesn't seem to be. Okay. So I'm already planning out next week's trades, guys. We've gotten through the news. What's happened has happened. There's been some first chance and some second chances. Right? So let me zoom in here. Okay. Okay, do you remember? Sell somewhere between the 382 and 618 Fibonacci retracement. We covered this before the news when I did the high volatility event driven strategy. There's another example. Okay. So lots of little trades. If you followed the trade plan, lots of little trades. So that's that. We can go back and do gold. Didn't I work for FX Business? No, but I was on television several times, yes. Well, that's funny. Where do I get news? I get news from 2 sources, fxstreet.com and tradethenews.com. Yeah, TBM, that might be true. Why is the S&P 500 dropping? All right, so you guys are not connecting fundamentally. Lots of jobs. What does that mean? It means the Fed's going to have trouble cutting interest rates, and interest rates have been priced in. So therefore, the dollar gets strong. Now remember, a strong dollar is a negative reaction. But anyways, the dollar gets strong. Bond yields went up. Well, let's say stayed neutral, really. So then, let me let's explore this with another question. Was cheaper money good for U.S. corporations? So again, Tilo says, why is the S&P 500 dropping? Companies in the S&P 500, do you think they like cheaper money, or do you think they like more expensive money? Now remember, U.S. corporations borrow money for cash flow. Yeah, sure, PWFX. No, John. All right, maybe there's too much of a lag, but no one answered the question. All right, so the 500 companies in the S&P 500 would prefer cheaper money. So when the Fed cuts interest rates, it actually lowers borrowing costs. Money gets cheaper. So that was priced in and all that kind of stuff. But with this many jobs being added, the market is now reacting in such a way that they're not so sure if the Fed's going to cut. Therefore, those rate cuts might not be happening. And the stock market doesn't like the fact that they're not going to get a rate cut. So the S&P 500 comes down. Yeah, wow, there is like a 2 minute, maybe 4 minute. I mean, there's a long lag today. Max is bringing up Frederick von Hayek. Really? Yeah. Harvard's very liberal. Faux show. Okay. By the way, thank you for your participation, guys. Lots of chat going this month. That's really cool. Well, Dragos is worried about gold over the next half an hour. Well, I'll tell you what, I'll look at gold, but over the next half hour, okay, let's just take a look at where we are. I got to go to an hour really to show you this. Okay. First of all, what are the key numbers here? Okay. Well, we're supposed to be between an R1 and an S1 this week, really. Okay. And we're near the S1 now. So I wouldn't be, we're kind of getting closer to a neutral area. So the key numbers today on gold is this number and this number. And we're playing with that right now. I don't think I would expect much more today. So if I were to be aggressive, I think we might get something like this here and then end Friday sort of probably pretty close to where we are. All right, so the reason I'm looking off camera, okay, I have a screen here, I have a screen here, and I have a screen here. Okay, so I'm looking at the screen on the wall. When I look up, I'm looking at the chat. Okay, so I have my chat up on here. I have news over here. I have my charts right here. So that's why I'm looking all over the place. What do you think of USD CAD sell now? Well, first of all, I'm not going to tell you what to do, but let's take a look at it. Okay? Let's take a look at this kitty cat. Now, if we had, like, if I was one-on-one with you, I'd ask you to explain it, okay? All right, so you say, what do you think of a USD CAD sell now? I think you're about 1, 2, 3, 4, 5, 6, 7. You're about 7 minutes late. And therefore, it's pretty dangerous. You should be moving your stop to almost break even at this point. By the way, take a look at this. We did a 3A2 and went up 200%, and it stopped. So I measured the news candle, and look, at the same distance went up to there. So somebody, who was it that asked about the sell? It's already gone off the chart. So whoever asked about selling, your only chance really, if you were going to be if you wanted to be a bear, was to sell it like this. Okay, I think that's actually a little dangerous because the market is bullish, not bearish. Okay, so we'd have to look at things from a little bit higher of a time frame. Okay. Okay, and even then, like you again, back to the person who said they were a bear, or should we sell it now? The resistance is here. Okay, this is the resistance, and when the question was asked, it was here. So, like, what do I think about selling here? It's a really, really dumb idea. You're very, very, very late. Very late. Very late. Very late. Okay. Very, 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 very late. Yeah, way too late. Way, way, way too late. I'd rather you be looking to get back in. Now, it doesn't sort of remove any risk, but I'd rather you attempt to be a trend trader. Okay. So I'd rather you be looking at it this way. Okay. Doesn't mean it's the right way, but I'd rather you go with the trend than counter trend. Okay. Now, in the report that I wrote for FX Street many years ago, I teach you how to do a counter trend trade, and maybe that is the counter trend. That's fine, but you need to be selling way up here, not down here. So hopefully you've read that. Thank you, sir. You are very good at what you are doing. Well, thank you very much. Pound dollar. Okay. Yeah, we can look at pound dollar. Let's do it this way. Okay. Okay. All right, let's start pound dollar on this time frame. All right, before we do anything, we have to pull out a compass and see where we are. Okay? Not where we are, but where we're going. Okay? So this area here is the most important thing. This tells me we're going to MM1. Pivot points are a leading indicator. So we knew, what's the date? The 5th, right? We knew 7 days ago that bears were going to try to take us to MM1. So let's identify where MM1 is, because then we know where we're going, which is a big, an important piece of information, right? Where are we going? Okay. But notice that I ask myself these questions. Where are we going? Where is the market going? This market indicates that we're going here. That's the conservative target. We may go a little farther. That's the more aggressive target down there. But certainly at a bare minimum, this is what the market is telling us. Okay. If it was going to go up here, we would have bounced a couple of days ago. We would have gone that way. Okay. All right. So let's now follow up with a little more detail. Okay. I'm most interested in where we're going next week. Okay. So there are different scenarios that could happen between now and next week. I can't even fit it on a 15-minute chart because I'm looking so far back. And then let me zoom out. Okay. So the area in which I want to sell next week is actually back where we started. So this is going to get tricky. This might move between now and then, but let's take a look. There's two things that can happen. One, we extend down and hit the target today. And with non-farm payrolls, that's possible. So we might be heading down to here. Now remember, this low, I'll circle it in fact, this low right here, that was projected 7 or 8 days ago. Okay? And you can take those. We call that front running. Okay? Just like I'm already looking at Monday's trade today. Okay? So anyways, we might head down, hit that target in which you would want to take profit, especially on a Friday. Okay? The other thing that might happen is we don't hit it today. We hit it Monday or Tuesday of next week, which means we would come down to, let's say, this area. We float back up, and then you sell either at the end of today or Sunday afternoon when the market opens, and we head down to the next level. Okay? Those are the two scenarios in that situation. Okay? I don't like reviewing euro pound. To me, that's not one that I trade. So I'd rather not. Kiwi dollar, I thought we did that one already. I think we did. But anyways. Okay, the stock market's going to open here. Oh, I do all the time. I've been in trades for like a year. This account, I think, has some exotic trades on it. Yeah. So like euro, lira. Let's do some exotics. Somebody asked for euro lira earlier today. So the issue is I've already hit my projected low for the month of July. I've already hit my target. So really I'm supposed to be taking profits soon. But you can see my 2 entries short. I shorted here and I shorted here. Okay. Now the swing trade for July was sell here and target here. So I'm already hitting my July target. My mentorship, you mean live.fxbootcamp.com? Yeah. Where are you saying a one-on-one with me personally? So like in that case, how long ago did I sell that? What was it? May. So I've been in this one since May. Might have been April. Looks like April. I've been in that one since April. FXBootcamp.com. B-dub. Yeah, you know, can I share some thoughts on balancing your trading and studying life at Harvard? Yeah, that's very difficult. That's very, very difficult. One of the best things about being a currency trader is you have the freedom to work at home, and that allows me to, wake up and trade, have breakfast with my kids before they go to school, and then trade, and then I can do some studying and do some trading, and hang out with my wife a little bit and do some trading, read a book outside, do some trading, study.
Trading on the NYSE has commenced.
Oh, stock market's open. Okay. So having that freedom to, always be around is the way to do it. Okay. Yeah, I don't personally mentor people anymore. I don't have a lot of time, and my time is very expensive. So for most people, that doesn't work out. Okay. How long do your trades last? I prefer to day trade, which means, so on a daily basis, a day trade would be in a trade the whole day. I like to swing trade, which means my trades would last, 3 or 4 days. And then monthly trades tend to last several weeks, but like these ones have been in for a couple of months. Okay. But anyways, yeah, PWFX, most people that come to the webinars are not millionaires. So if I said how much it is, if for me to mentor them one-on-one, they just don't have it. So yeah. Right. So I don't really, that's not really something I do. Most people can't afford it. But if you go to live.fxbootcamp.com, most people find they can't even do the work necessary. But anyways, that's probably what most people need is live.fxbootcamp.com. The squawk is tradethenews.com. All right, so someone asked about buying in here. You can. This is called, if you were to do that, it would be called a counter trend trade. But the problem is you would never want to buy this pair. What is the longest trade I've been in? Year and a half to 2 years, maybe? Jekyll says, are you big on supply and demand trading? Well, first of all, I'm self-taught, so I don't know anyone else's strategies. And so it sounds like you're being definitional by supply and demand, but trading is supply and demand, so it almost doesn't make any sense. So I'd have to know more about what you're specifically saying, but all support and resistance is supply and demand, right? So, and you might be talking about flow and all that kind of stuff. It really depends on what you mean. How many trades do you manage at the same time? I've had as many as 200. Into Smet Robbins like 1.5 years. Yeah. So like for example, where are we on this, right? If we analyze this, so this is just my coaching account, right? It's only got 30 or 40,000 in it. But I use it for demonstration and examples from time to time. So if I open this up, you'll see like this first trade. Do you notice that? It's okay. I've put $100 of risk on it. Okay, $100. I've made $173 in interest. Okay. Jekyll, I have a lot of indicators, but I don't need them. And flow, yeah, on certain types of trades, yes. Okay, let's go back to this. So back in April, I put $100 of cash, right? That's margin. It takes $100,000. It takes $100 to control 10,000, right? You see that? And since then, since April, I've earned $173 in interest. Okay, I've made 173%. Plus, I'm up $1,200 in profit. So I'm up almost 1,400% since April on that one trade. So again, I needed $100 cash to get into that trade. And I'm now up $1,400, money in the bank. Okay, Michael says, why do I get paid Wednesday and Thursday on swaps? All right, so this is actually a mechanism of how the foreign exchange works in the banking system. So most of the time you don't actually see the actual process. But there is an actual process of money moving, right? And they call it a T+2, which means your trade actually takes 2 days to clear. But we're paid for 7 days a week, right? 24 hours a day, 7 days a week. So the reason you get big swaps on Wednesday and Thursday if there's a holiday on Monday, that's because you're getting paid for Saturday and Sunday. Okay. You're getting paid for the weekend on Wednesday at 5 p.m. rollover. And that's because of the T+2 phenomenon. And it's really nice. And you don't actually have to be in the trade the whole day. You just have to be in the trade at 4:59 p.m. for rollover. So you could sell the Euro Turkish lira at 4:59 Wednesday afternoon. At 5 p.m., rollover is conducted, and you'll receive 3 days worth of interest. Essentially, you're getting paid for Saturday, Sunday, and Monday, even though you only held the trade for 1 minute. Shug says, what leverage can you afford to sleep and stay calm and overnight and all that kind of stuff? Well, it's not really a function of leverage. It's a function of lot size. So most people use leverage so that they can have lot sizes that are large relative to their account size. So I'd just say, in that case, well, cut your leverage. But you could have 1,000,000 to 1 leverage if you're still making small lot sizes relative to your cash position, then you'll be fine. So it's just, in the United States, 50 to 1 is enough. Outside the United States, 100 to 1 is enough. Don't worry